You're watching the Daily Market Comment. I'm Hara Lambos Bisuros for Wednesday, September 7th. I'm Christina Marucos, and thank you for joining us here at XM.com. After taking a breather on Monday, the US dollar recharged again yesterday, with dollar-yen skyrocketing to levels last seen 24 years ago. But added fuel to the greenback's tank may have been the better-than-expected ISM non-manufacturing PMI. Instead of sliding, the index rose further, reinforcing the view that the U.S. economy is not in a recession. With Friday's employment report suggesting a tight labor market, despite the increase in the unemployment rate, the ISM index encouraged market participants to add to bets of another 75 basis points hike by the Fed. They're now assigning a 75% probability for such a move, but they still see a chance for rates to start declining next year, even as several policymakers warn that interest rates are likely to be held steady when they reach their peak. All this implies that there's still room for disappointment and thereby further upside for the US dollar. More economic data beating its forecast and more Fed officials adding to the overly hawkish narrative could do the trick. And with the yen being the worst performing major currency year to date due to the Bank of Japan's stubbornness to maintain an ultra-loose strategy, dollar-yen appears to be the best gauge for exploiting rate differentials. Increasing expectations of a more aggressive Fed continue to hurt equities, as higher rates mean higher borrowing costs for companies, as well as lower present values, especially for high-tech firms. That's maybe why the tech-sensitive Nasdaq was Wall Street's main loser yesterday. That said, apart from the aggressive appetite of most major central banks to raise interest rates fast to tame very high inflation, investors may be reducing their risk exposure due to fears of a global recession as well. With Europe dealing with a profound energy crisis and China bleeding due to a battered property sector and new COVID lockdowns, the downside risks are more than noticeable. The fact that oil prices took another dive yesterday adds credence to the narrative that global demand concerns are intensifying. Traders will be eyeing the Bank of Canada decision later today. Investors consider a 75 basis points hike a done deal and may focus more on the accompanying statement for hints on how the bank intends to move forward. With interest rates expected to peak at around 3.75% in March, a 75 basis points hike means that the bank may have to slow down from today onwards. However, if those expectations are not confirmed and the bank remains willing to keep hiking aggressively, the loonie is likely to gain, especially against more wounded currencies like the euro, the pound, and the yen. This was the Daily Market Comment. Thanks for watching at XM.com.